Welcome to the show, folks, and to welcome in 2026. We're taking a look at stocks and watch lists to get you set up correctly for the year. I'm Rocky Outcrop. I trade, I teach people to trade, and 2026 is going to be one of these years where everything goes really well for you because I'm going to do the whole teach a man to fish you can eat for more than just the day, don't give him a fish thing. By helping you get a watch list for 2026 that will give you a starting point to move forward. Because I know a lot of people have had a frustrating 2025 trading and investing. I know they have. And they're thinking to themselves, I've got all this knowledge and experience, but I just have some sense of needing to step forward, and what direction do I have to go in? And if I could channel this energy into something that will work, then I will do it. I know that a lot of people out there are thinking that. So what tools can I give you that will help you do that this year? And a watch list that gets you your framework to help with your thinking right now from the start will be brilliant. Why will it be brilliant? Well, you will be able to add to it throughout the year, and it'll give you context. So as your year progresses, your watch list will progress alongside you, and every time you become more familiar with it, you'll notice more trading opportunities. So instead of having your thoughts spread out across 100 different ideas, across 100 different ways of accessing them, we'll put them together, categorize them, and help you assess them relative to each other. And we'll do that throughout the year. But for us all to do that, we're going to need to have some sort of starting point to work from, and that's what we're going to be doing with today's show. Last week, by the way, we did something quite similar in a sense, in that we looked at the Ghost of Futures Past watch list, and I did share this in the Discord, link in the Discord. To get this, just go, there's a link in the description to join the Discord. As it happens, it's free, and you can get this watch list. And the one that I'm sharing today will be similar, likewise. Be able to get a link to it, perhaps even in the description to this video if you're watching along later. And if you are watching along later, or you're not subscribed and new to the channel, I'd like to have like 2026 be the year that my YouTube channel grows in subscribers. I think that can be something that we can do together. So putting a target in place for the sort of how far can we get this year, something that I can ask people, and we can figure out together as an audience and community together what we can expect, what we can do, and if we can drill. If you're here new watching this, stumble across it somehow, and you think you could get something from it for your year 2026, become a better investor and so on, then you haven't hit the like and subscribe button, please do so. Let's see if we can grow the channel. So this is like, last week we were talking about the Ghost of Futures Past. It was a funny name because it was Christmas Eve, and the topic itself was serious and helpful. It was about looking at futures charts and asking how they performed in the past and how they could perform in the future to give us extra info about how the markets are doing. This is to be so that you can be a little bit more informed in your trading than simply thinking along the lines of the SPX or NASDAQ or the DJI, Dow Jones Industrial Index, is at all-time highs or going up. So my stock pick, my individual stock pick, will do well. And comparing one small stock pick to like the major index, how can you get more information than that? Why would you even do that in the first place is a question you might be asking if you're brand new to investing. And the simple answer is, if everything's moving up together, it helps you be bullish. If everything's dropping down, it makes you bearish, So this is one of those things people do. But how can you do better than just looking at the one big index? And this is a great way of doing that. It's got a lot of different parts to this. So rather than explain it all here in detail, because I did a show on it last week, just do check out last week's show and you'll be able to see all the reasons why. But you've got things like the value of the dollar itself. You've got steel, which I think has got something interesting to point out about it, actually. Steel itself has, this is copper, sorry. Where's the steel one? This is the steel one. It's got something interesting to point out, by the way, just as we're here talking about it, as there has been a jump up, a big gap left on the steel prices for US Midwest domestic hot roll coil steel. So quite a specific steel, but I'm looking at like the US economy. How's it doing? How are people in the US buying steel, and is steel price gone up? And we can see it's jumped up here today, which is quite interesting when you look at things like SPX, and you say, okay, so SPX, it's also, you know, near all-time highs. But so it gives you an idea about the economy. If people are building houses and so on, they'll need things like copper, but copper's at high. So then you ask, well, are people building houses? And you look at lumber, and lumber's at lows. Yeah, well, if they're building houses, the price of copper isn't high because they're putting it into houses if the price of lumber is low. So then you get to an idea that, well, okay, where's the money in the economy? Because if people are, you know, building houses, that's a pretty good sign for the economy. So why is copper price high? Well, it's because of semiconductors. And then you understand about the concentration in the SPX. And then when your SPX is running high and your stock isn't running high, and you think, but I checked with Dr. Copper, this is what the nickname for copper is, to see how the economy is doing, and the copper told me the economy is doing well. Why is my stock not doing well? Well, because if the middle belly of the economy that pays you to go to your job and so on, pays the mortgages of your life and the people around you, was doing well, perhaps lumber would be doing well because people would be building houses. But it's not. So, you know, so this is the point of this list, and it goes into more and more detail and explains all the different parts. Like, for instance, you got interest rates over here. Interest rates, interesting to point out that they're up here at these sort of highs. Could they drop down? We've had people saying that they could, and if we look back over the last couple of months, we can see that the rates here in the 2-year yield is still at highs that it's been since September, but there's been 2 interest rate cuts by the Fed since then. Of course, this is different to the Fed interest rate. This is the interest rate on US Treasury yields. But looking at this and thinking, well, could we see this follow suit, having had a few months but not doing so? So you see how the clarity emerges here. Here's oil. You know, if oil's doing well, then it would go up. So you can see why there's a good value to having this list of things, and it goes into more and more detail about the economy. You've got Russell, which is the middle belly. You've got SPX futures, you've even got Bitcoin, Ethereum, and some altcoins, steel, gold on there as well. Really useful stuff, great to understand it. And if you were going into 1 week or 1 month, or looking at the next quarter, or looking back at the previous week, month, or quarter, or day even in your trading, and trying to think, you know, did I align well with these factors? Could these factors have given me better information for my trading and investment decisions over the last week and next month and so on? You would be able to tune your trading much better and get much better outcomes by looking at these heuristics of the economy and seeing if they're going well or badly. Really interesting, very useful stuff to have. So if you've got such a powerful watch list like that, then what watch list could you have which is even more powerful? And that's what we're going to be discussing today. And by we, I mean we, folks. We, if you're watching this later, then of course there is live chat that's happening in today's show. I have, it's live that I record this, by the way. I've got a goal in the chat that will have a Hog Mini cheers with New Year's beers. If we get the goal met, that's what that goal is that's running in there. So we'll have a bit of cheer. We'll do a bit of Auld Lang Syne together, and have some New Year cheer because it's a New Year video. And I will be taking your comments and suggestions and so on. And we can see people are chatting to each other in there, but hopefully we'll get some comments directed towards us. And by us, I mean me and you, the future viewer, recorded viewer, later viewer of the stream. Maybe these guys who are here watching live will help make the later recording better. Oh, to put the spotlight on the audience for a change. How's that? How are you going to react? How are you going to perform? So what do you think about the idea? Let me know in the chat box what you think about the idea, what you think about last week's watch list that we talked about. I'm just looking at one of my names of my old watch lists on here. Since it's broadcasted live on YouTube, there's no point in pretending it doesn't say that there. So I'll just read it. Yeah, so I had a watch list in the past for similar stuff. I called it Steel and Shit. You know, you just need a name for your watch list, right? But where's my this doesn't seem to have it on there. Refreshing the page just to see if it didn't. There we go. This is the watch list that we're discussing today, folks, and I'm just going to copy this link, and this is what you would see if you got this in your, by going to the Discord or whatevs to get the link. Go on, paste in there. Did I? Oops, use the Mac keyboard layout on a Windows computer. So this is what you would see yourself if you were to go to visit that link, and just arrange it so I can see that it is correct on your screen. Yeah. And this is cool. What you can see here is a lovely layout of your future knowledge. That's right. This time next year, you'll be able to look back at the year and understand how the economy, the macro signals, the actual hard data on real money that's being traded today on various equities, that's stocks, shares, companies, and their select sectors, which is like a group, an index of, a group of, a collection of those stock prices together to give you an average. Well, hey, Hogman A, thanks so much, Dashi. That's cool. Thanks for getting involved in that there. That's awesome. Shout out to Dashi C. Yeah, so let me know again, like I said, about about what you think about the watch list, the idea so far, and Ghost of Christmas Past. Because your chat is going to be involved in the show today. But by the end of the year, think about it. You know, can you describe 2025 or 2024 as a year where you can say this happened in the economy? These factors led to this demand and this supply, and this flow of capital created these opportunities which saw these stock prices perform well. Can you do that? And can you say these stock prices perform badly? Because now a lot of you in the audience, to be fair, will be able to do that quite well, because that's what I teach often, and I've done a lot of that work over the years. So you probably know, and if you're new to the channel here, you probably think, well, yeah, your viewers know. But you yourself, did you know? Could you have done that? And if you were challenged to do that for this year, would you have the skill to do it? Like, you might not believe it, but I can tell you that you would. You might be lacking in confidence, and a leg up on that front is going to come from this framework here. So it looks good. It's a good start. It's a good starting point for everybody on your screen, and it's got a good amount on there. And as you can see, as I scroll down the page, there's this lovely graphic which shows you that we're looking across 9 stock sectors in this list. We've got 12 industries. So what does that say to you if you're just tuning in here, new? It says that this is looking across a broad range of the economy, and that there is a clear set of division amongst the different stocks. Now, some of them will overlap at times, and when it comes to adding to and building this list up, you can, of course, like, make those decisions yourself about how you want to add to your own version of this. You might add in a stock on this list, perhaps even twice or something like that, to get it into different things. I would recommend kind of keeping it clean and keeping something in one category or another. And you'll also wonder then, why are there slightly unusual looking tickers in amongst this, such as XLU, XLK, XLI? Let's say ETF on the end of them. If you're a pro trader, you probably know what those are already. Would you know why they're in the list? You might say that these things are in the list because they give some degree of context, overall context, but there's actually also a pragmatic use for these. So there's 2 reasons. And I want to give a big shout out to TradeSpotting. It's my brother who is a great financial expert himself, and with a couple of really great conversations this week, he's really kind of lifted up parts of my game as it comes to this watch list that I'm helping people with here, and ideas talking about the way the economy will go. I had a really interesting conversation with him today, actually, about the future when you think about petrocurrencies. And he came with this amazing idea about how the US dollar's dominance with regards to having been used as the petrol currency of the world, but with oil being denominated in US dollars, how that could be impacted with the new energy economy that's coming up, and some really interesting ideas there that I just thought, wow, that's ahead of the curve. And so big shout out to him. Anyway, one of the ideas that he gave me over the last week, and he was talking about it in the Discord chat that we had during the week, in the voice chat, where we talked about some ideas for 2026 with a particular focus on the cannabis stocks, which is in this list here as well, by the way, is that you have an opportunity to compare the individual stock that you're looking at to an overall index and then decide whether it's the one within the index that should be being traded. So, for example, say you're looking at a group of cannabis stocks and you had an overall idea of how the overall cannabis market was moving, and you saw it was moving, for example, down, and you saw that one of these companies was moving down more than any of the others. You might think, well, if I wanted to short this market, I'll go for the weakest one that's performing absolutely worst. Indeed, you might think the opposite for the one that's doing the best. In bullish markets, you'll go for the one that's outperforming all the others. Now, there's more dynamics than that. You could be looking at ones that are underpriced. Will they catch up with the overall market? It's all moved ahead. This one has a really big opportunity to grow more than the others. That's a great topic for an investment. But also, that can be a sign of something else. What if one of these companies is the great big one performing super well and has always been the blue chip best performer, but then it starts to perform badly while the rest of the market remains high? Is that a warning signal to you? And could that information be useful? And then you start to see that actually there's a pragmatic use to having these in here. But as well, as an investment idea, if you were interested in any of these individual tickers and you had a thesis that relied on the idea essentially that the market has some degree of sense to it and will move together, then you may be better off sticking to actually investing in an ETF that covers a variety of stocks to kind of diversify your risk and so on. Now, I'm not a financial advisor, none of this is financial advice. What this is education. It's going to help you do the best you can do this year. Big shout out to the people who are taking part in the chit chat box, like I've been suggesting to people to do. We've got Hogmanay coming in from Dash EC. May your first footing bring good whiskey. Thanks so much. And a wee lump of coal. That's how it works. Get first footed in Scotland, and thanks so much. Katie jumping in there with happy Hogmanay 2026. Good one. Good pun. Good punning. Good punning. Yeah, folks, like I said, the chat box is there in the comments below this video exists, so you can let me know what you think about this idea. Think about how using this information could be useful or not. I don't know for you. And what you think of my last one, the Ghost of Futures Past watch list, how that could help you understand the macro so that you can understand the micro better. If last week was the macro, though this week is going to be focusing mostly on the micro, which is why there's so many equities listed here. But there is that bridge between macro and micro, which is really helped by looking at something like a utilities sector, SPDR, ETF, all these extra words. What you really just need to know is, and how you could do this yourself if you're adding a new sector to this watch list, which you may well do, could be that you could, for instance, add biotech as opposed to the more generic healthcare that I've got here, for just a quick example. Or you could add vehicles, right, as a category, and you might look to our auto industry. You could then find a ETF, or what's known as well as sometimes as select sector, by just going into Google and typing in what is the ETF that represents this stock. But a better way of doing that, of course, would be to jump into the Discord, say it to somebody else, chat about it, and see if they've added it to their watch list too, and what ideas they have. Because, of course, you know, we're all better off working together at times when it comes to doing this sort of research, where it's not about opinion to say that this company is within this sector, but it could be about your opinion as to whether you keep it on your watch list or not. And that's why I've put a few examples for each of these in here, but you're not obliged to keep them there. But they are good shouts for looking at a couple of things this year. So I'm going to explain each one of these and what they are, just so that you know, so that when you've added this list to your own charts, that you're able to use it. But I'm also going to take a look, as we do this, at some of these different charts so that you can get an idea about what we're looking at. So I just mentioned, for example, State Street's Utility Select Sector ETF, and it's XLU. And I have it listed here under the category as utilities, and I've got two companies below that as well within that already. Now, it's quite a broad category, this one. And if I were to dive deep into this category and say, let's look at the tertiary level businesses augmenting the AI sector within utilities, which is essentially what these two are. If I wanted to broaden that out which is to say, look at the infrastructure supplying the companies which are using it for AI, and have an AI category on its own, which is a notable exception. It's not listed on this here, and there's good reason for that, by the way. Shout out to TraceBotton as well, because of course TraceBotton will be adding into and talking to and using this list and these lists and lists of his own, and over the year we'll merge in items, and he's got a lot to say about AI companies, and in fact during that weekly that show that we did in the Discord in the week, we talked about that. TraceBotton ran through a bunch of great stock picks, really excellent ones. So rather than spoil that amazing content here, I'm going to add that over time and help and invite you to take a look at at that content in its own right when it becomes available to the broader public. So it was available for the public in the Discord, though. Anybody that's a member could have got to get in there and see it for free, and we will share clips from it there too of the recording. So this is so if you wanted to do this, and you wanted to narrow down into something like a list like AI, like I was saying that TraceBotton has done, which will be added to this list as its own sector eventually, you might want to keep utilities and still have an eye on the overall macro picture and not get necessarily too drilled down by converting this to just renaming it to say AI and focusing on AI companies instead. Okay, but that's the so right. Okay, so what's the big idea right here behind this? And like, AI needs are insane, and what they use is electricity. So we're looking for something that's not just a boring power company here in the utility sector, although certainly adding boring power companies to this would definitely be a good idea for that macro picture. What I've got on this list is kind of ones who are doing the building of the 2026 grid. You could kind of bullet point that as saying this is the picks and shovels. It's a great American metaphor. The picks and shovels idea, if you're not familiar, which I doubt, but I'll say it anyway, is that of course everybody flooded to California to pick gold up off the ground, and then afterwards people were then coming along and buying picks and shovels and trying to actually dig it up out of the ground. And while that was happening, some people struck their fortune, some people didn't, but the ones who made often the most money were not the ones who were picking up the gold off the ground and digging for it, but were the ones who were selling the picks and the shovels to those people to go and buy it, and that the better money would have actually been setting up a pick and shovel stand. Now, if you think about it that way, you're probably right. If you were Carnegie at the time, and this is a shout out because it's New Year, and of course he's my hero, you would have set up gold, buying and selling gold shop, right? Wow, there we go, and start getting some margins on that. That was one of the many things he did, but Carnegie is probably the one most attributed to the whole picks and shovels, parable of business, right? Anyway, but that's what these are essentially. We're looking at the companies that are giving picks and shovels to the AI guys. NEE, which is the second one here, Next Extra Energy Inc., is the king of clean energy. They're the go-to for tech companies that need green power for data centers. So this is something that's in demand going into 2026. BEP, which is Brookfield Renewables, are a global giant in hydro and solar. Okay, they have massive contracts to supply always on power. So we take a look at a couple of these companies so you can get an idea what their charts are like, or your charts like, and we'll put it on the weekly time frame so you can get an idea. Right now this is trading below the 200 simple, above the 50 simple. The 50 simple moving average on the weekly time frame is below the 200 simple. Right, so this has been bearish because the 50 simple is below the 200 simple. It's been bearish. We look back, they crossed bearishly in 2023, but we have seen recent price movement taking it past recent highs, but the old higher lows here. Is this upward movement of what could be described as a valley, sort of valley 3 upward rise and valley type idea, an accumulation phase on this stock? Could it rise up towards highs? As we know, demand is going so high. These are renewable energy companies that have got big demand from tech giants. I mean, like, this 50 simple is pointing up the way. We could see a golden cross on this thing happen on the weekly time frame, leading to a period of sustained upside. Having it on a list in advance, pretty good idea. Having it knowing it's within a category, being able to compare it to how the select sector's doing. What if everything in the utilities world starts dying? is there a reason for that? Can you figure out a narrative? Does that reflect positively or negatively on this stock here? Or does it reflect positively or negatively on this stock as you go through them? So like that. So for instance, if XLU, the sector, were to drop down to 26, having been up trading at 42, that could be indicative of problems in the economy. If we look back, we can see this had a really powerful sustained uptrend since 2009, really powerful and consistent, with occasional large drops down, such as we saw in 2020 and again in 2023, and at times like throughout the years. But if this then continues to act like it's done in the long time frame, this really long upward trend, which within this select sector might be the best bet companies to get that most value from, and below that you put in your extra ideas, and then at any given time between them you compare the overall picture to those individual ideas. But that isn't the overall picture of the economy in the same way that the major index of Dow Jones Industrial might give a particular picture, or the same way that the copper futures give a particular picture, or lumber futures, or interest rates. They all give a piece of the picture. And as you triage these ideas down to get what's most important for your individual needs, then you get a better investment decision. And of course, then you get to look across the different markets and understand how things are going. For instance, today we can see industrials, real estate, IT, information technology, and utilities have all had a bit of a hit, whereas in the cannabis sector, that half of those companies have done well enough today and have had green days. We look down towards healthcare, and 3/4 of those have had negative days, and the sector itself has been negative. Over here, the marijuana sector, the cannabis sector, has had a positive day, and within it, positive stocks. And you can see here, real estate has had a negative day, and within it, only negative stocks. Industrials, negative day, within it, only negative stocks. Likewise for IT. So that's powerful. And I think then even on an intuitive level to a new investors looking at this, they're thinking, wow, I've got some, this is the difference between 2026 being a good, successful year that empowers me, gives me the knowledge, and 2025 where you didn't get that same empowerment. This could be the difference. But what is the also? It's building on your own knowledge in your own charts for you. It benefits you. It doesn't benefit me. I'm just giving you this information. This is not like some YouTube channel that's pumping or dumping particular stocks or cryptos or whatever. I'm giving you the information to empower yourself. And it's not like a hedge fund that's only looking to trap you in particular stocks, or CNN that's like got paid a brown envelope of money to pump some stock to you or something like that. Instead, this is giving you the tools, like the person who's supposed to go onto those platforms and give objective chat, so that you can form those things yourself, and then I can be a resource for you as you want to verify those ideas are actually working in a sound environment. And you can think, wow, 2026 might really be the year for you, and that's what you've got in this channel. That's what we're talking about this source. So you can see how this is a powerful bit of chat. Information technology, look in here, we've got XLK, which is a tech ETF. High exposure to the big three, right? So Apple, Microsoft, Nvidia, they're all in here. If you were thinking you wanted to invest in those companies at some point in the last year or two, and you couldn't decide between which three, and it made you hold off on investing at all, you know, this here would have been an easy option where you got exposure to that sector, and you can of course do technical analysis and measure the trend and magnitude of moves and where the risk and reward lies on a chart like that completely. But then you've got stocks within this sector, and I've got a few examples of those. And again, this leans in a particular direction, and it's missing a small stock on this list, and I thought during this section of the show here, I'll add a stock to this list so you can see how it's done for yourself. And that's good because it's useful to know that for folks. Just checking in here with my stream, woo! And I can see that 8 minutes ago we had super chats coming in. Just seeing if I've not missed any donations there using the PayPal. That's right, I haven't. No crypto donations missed either. So it gives me an opportunity to check with the live chat box. Where's my live chat box disappeared to? Just a second. There. Yeah, great. Good to see folks in here. We've got Grace Foundation chatting, and that's cool. Or it's Foundational Grace now. Good to see folks in there. Yeah, what do you think about the ideas, how this is working for you this year and stuff like that? Let me know. Let me know what you're thinking of for 2026 and your plans for 2025's last evening. If you're in Australia, how did it go for you? You're already in 2026. And if you're back over there in the west coast of America thinking, whoa, it's hours and hours away, too early for a Christmas beer. Well, it's New Year. It's, as they say, it's New Year somewhere in the world, and I'll have a beer with you there to celebrate. A nice healthy beer, that is, that one too. Cheers to another year with all of you. Cheers to better looking portfolios, more informed decision making in 2026. That's a great comment from Disco Biscuits. We've got a goal run in the chat. If we get to that goal, then we'll have a Christmas beer together. And we'll obviously be looking at your messages in here as we go. But this is a show that's involving you guys, by the way. If you want to get a message out there for Christmas to wish everybody a happy Christmas as well, or New Year, or holidays, or Hogmanay, or whatever particular religion you follow. Could be that you're a follower of Judaism and you celebrate Hanukkah, or you could be a follower of Scottishism and follow Hogmanay traditions. Whatever your holiday is today, let me know it in the chat box. I'm of course celebrating Hogmanay. That's my one. That's my one. What would you add to the watch list on these categories? That's Jimmy asking to the chat box in there. There's a religious message for people who feel it that way. That's a positive message to people in the chat there. So there's everybody celebrating the new year, looking forward in different ways. And what we're going to do here is look at how you can add something to this watch list yourself. Give it a nice wee color, right, as well. You can give it a wee color so it's easier to see. But before we do that, we'll just dive into what these companies are that I've got listed on the information technology sector. And the first one is CRM, which is Salesforce, which of course is heavy into integrating AI into their business sales process stuff, into your business. They'll integrate AI into your business, right? That's what the theme is there. Sorry, they own the customer data, right? In a way, they get that starter stuff. And if you're looking at the gold line on the streets, it might have been Nvidia that made processors to power these companies. The next step then is maybe actually using those tools and who can get good money from them. So that's an example of a company in that sector. We've also got Now, and we can see as well, if we look at these, that there's been positive bull trends on these companies for like some time. Powerful companies doing well. So this overall sector is something that people are finding good value in. There's also arguments being made about exposure to things like recession risks or so on, if there were pullbacks in the economy. Do these companies benefit more if companies are declining their balance sheets and their profits are dropping and their losses are increasing? What are they looking to do? Maybe they lay off some staff. Maybe they lay off staff and employ CRM and think, well, we'll slash our customer services budget. We'll pilot into AI instead. Kind of like the way in 2020, a lot of these companies got a big boost because people could see that workers weren't being able to go to the workplace and jobs needed to be done, and AI was going to do it, especially for like customer service and so on. And so chatbots boomed, and so did Zoom and other things. And that was because people couldn't go into the office. Now, what if the companies are unable to pay their staff? It's the same thing, right? There's no disease, but they can't bring staff into the office. What are they going to do instead? They're going to hire some cheaper alternative. So this actually has a kind of recession-proof business model to it, which might be a little bit of a more interesting way of looking at AI if there are AI bubble fears. Perhaps the AI bubble exists on companies that have only really benefited recently and bubbled up. Maybe there's opportunity for the picks and the shovels. And of course, another one is Now, right? Which is ServiceNow. Their AI for HR and IT automate office work. That's kind of what they're trying to do. Like, we've had good strides made in this company as well. It's an interesting one. Over here, then there is ACN, which is these are the Accenture guys. Jimmy did a video on these. TradeSpawn did a video on these about 6 months ago. Accenture is one of these companies. It's crazy that it just, wow, always has been just always doing well. There's been periods in time when it's had a drop down, usually because the world has been collapsing, like in .com crash over there in the great financial crisis. Yeah, suffered a bit during those times. But then every other time, just up and up and up. Just always, stocks always go up, bro. Of course, it suffered during COVID as the world went down to test the 200 simple moving average on everything. But recently it's also suffered, and this ties into a story about, has there been a hidden recession, which if you watched last week's video you'd understand why looking at the Russell 2000 might be an interesting thing, or why looking at RSP, an equal weighted SPX ETF, could be an interesting thing compared to looking at the headline figures that you read in the newspapers or hear on the news about how great the economy is. Maybe you could find ways of seeing if there really is a hidden recession happening, one in real terms, when you consider inflation versus the your cost of living crisis. It's actually experienced. Maybe that explains this. And if we go into a period where there's actual growth, then maybe we can see Accenture push past the lows of 2022, past the lows of 2023, and past the lows of 2021, moving up into 2020 when the great pandemic happened, was the last time that this company really pushed up to highs. It did test again in February of 2025 at those highs, and in April 2024. So if we're thinking that history repeats itself in some way or another, this could go up towards testing those highs towards the next first 6 months of 2026. If it pushes higher, it could be because there's a positive thing happening, like actual growth in the economy, like we saw for the previous sort of decade. However, if prices fail to move higher, drop down lower, or if they only test high and then pull back down afterwards to confirm this death cross here on the weekly time frame, which came in around about October or so, then maybe we see this be indicative of a harder, deeper, stronger recession. And how does that change the way that you think about investing in stocks that are at risk of counterparty risk? What if your company's great, but they can't survive in a world where their competitors go bust or their suppliers go bust? How do those companies work? So even though you like a stock, would you invest in it if their supplier might go bust? You wouldn't. So this type of signal is a useful one. And SAP are global software guys, package software, and a company thinks to itself, oh, I want to go digital. I want to go digital. What am I going to do? I want to go digital. And what does that mean? Well, I don't know, but my CEO said it in this meeting that, guys, we have to think about going digital. I'm the head of going digital now, and I need to figure that out. Who do they call? Well, they call these guys SAP and Aken. SAP and ACN. You don't really need to know the actual names of these companies, just need to know the things. But anyway, SAP is called SAP. So anyway, they'll package you up some software and get you going digital. And you can see they've also had a great time, but over the last year, not done so well. So 2025 hasn't played well with Accenture, hasn't played well with SAP, those companies that are going digital, has not gone well either for ServiceNow, and has not gone well for Salesforce. But the previous sort of decade went really well for these companies. And that makes you think, well, if there's going to be positive moves in the economy, perhaps these guys get to be part of that vanguard of moving up. If the economy does crash down, perhaps we see some signs of that here as well. You know, here's the select server overall, the select sector on this one. So you can see that it is at highs. And if it came down to test its 200 simple, it would be a little bit soon, you know, considering that you're looking at a couple of years generally between these, and we did test it back in April 2025. So if you think about, like, if the movement on this of this sort of magnitude happens every few years, right, then it can sometimes, it would feel a bit rushed in a way if it were to happen like now, straight away. Could happen again in the future. If that's your idea and you think this bullishness is going to stay bullish and it's a bull market, so you know it's a bull trend, why would you be bearish on something that's bullish? It's been bullish for since 2011. Since 2011, people have said this thing's going to crash back down. It's going to crash back down. Yeah, and it hasn't really worked for them overall. So maybe this is just showing us something else. Maybe this stocks always go up, bro thing is a fact. Is going to just have to be a fact because American inflation is so high with 30 trillions of dollars of debt that the that inflation is just always going to be the way of it. And really it's less about stocks and charts and everything out there looking like they're doing this followed by doing this and then followed by doing this. Maybe it's less about that in the sort of 10-year span of this type of thing, in 10 years going up the way. Maybe it's more a case of understanding that about the flows of real actual wealth, and like if you're generating upward inclines in your own sort of bank balance versus the amount of money that's being taken out of it by your value of your money inflating away, then it's about flows of capital and it's about understanding risk and reward in a regime where stocks maybe do always go up. So maybe you're going to just stay bullish on this until we get information not to, and if that was the case, then you'd be looking for some recovery here and so on. And what company could be added to this which would epitomize that? What company could be added to this that would epitomize that? Question for the audience. If we were to add one to this one, we've already talked about CRM and we've talked about Now, for example. We talked about companies going digital. We talked about recession risk and sacking all your customer service. So one company, for instance, that could be added to this one is a company that's called LivePerson. I like to talk about this one time on the channel because it's like a penny stock, really. And when you're looking at this as an overall sector that could do well, then you might think that the companies that are doing very badly in it right now, like this one, could eventually turn around as well. So, you know, providing the fundamentals for this company pick up, maybe it will be a part of this overall upward trend in the longer term, possibly, you know. So there's a transformation story happening where they're trying to get past a period of debt and so on. The question throughout this period has been, will the company survive? And as time goes by and that question lingers, markets have priced it down, because if you're asking the question, will it survive about a company, then naturally, you know, that's a bearish question. But then over time, obviously, as they're trying to survive, if they're making improvements and actually improving the health of the company, they're getting more and more close to surviving. So you ask questions like, what's the runway of the company look like? And if they're able to extend that out, runway is a kind of nice metaphorical word for how much further can they go forward before they run out of ground beneath them. And the ground beneath them is, in this metaphor, is like paying their debts. So how much cash have they got in the bank to be able to pay their debts? And once that runs out, then they'd go bust, that type of idea, that sort of thing. So how much is that runway have they got? And they've got that up until however many years away. So that type of thing is the noises the company are starting to make. The market isn't quite there with fully believing that yet, and it's been priced down. But when the story goes from being, will it survive, to this will survive, how much will it grow? Like, how much will it grow? Then that's a story that maybe sees this thing run back towards the top side. In terms of this thing, looking at it from the highs to its low, it has had a stock split for full transparency here, so that does impact the numbers that you're looking at. But in terms of looking back to how this thing was priced during the pandemic, when Zoom and so on were priced very high, Well, you're looking back at $1,000 in today's money, and it's priced right now at what? $3.79. So your question then is like, okay, well, they were priced up there. They had what, lots more money and lots more customers back then. And you say, well, yeah, they did have more money and more customers back then than they have now, but they went through a period of losing customers faster than they were gaining customers. It was less about the absolute number then versus now. It's more about whether they were losing or gaining customers. In that period, we saw them losing customers. But if we see them gaining customers out the other side of this, then of course that number really changes rapidly. So this is the type of fundamental question this company's trying to answer right now. And as obviously, if you had a big bucket if you're looking at a pool of customers which was large and had big budgets and big players in it, and some of those drop off, then losing say 10% of your customer base when it's say it's $100 million, use 10%, that's like losing $10 million worth of customers, right? Then as it goes down, if you lost 10% of your customer base and it was only $30 million value, you'd be losing $3 million. So the ability to gain new customers to outpace their losing customers becomes easier as time goes by. So, but of course, the existential risk to the company goes up, and that's why you see that dynamic. But then if they start bringing in new customers and they're growing, and they've got other metrics like their average customer revenues are growing and so on, then hey, that starts to change the picture. So you would think, okay, in this instance, I'm going to see if I want to add this one to this list, and you just when you're writing in a ticker, so you can initiate that by just simply typing into your keyboard when you're on TradingView. You can also tap up here in the search box on top left. It opens up the search screen and you can start typing that in, and you can bring up the ticker here. Okay, and then you want to add it to your watch list. Actually, it's actually somewhat more complicated than you would think, because you right click, you go to this menu here, and you could add LSPSN to watch list and add it to any of your watch lists, right? Great, cool. But if you're already on a watch list, the easiest way to add a ticker to it is to hit the plus button at the top of the watch list up there, and then to add in from this list. In fact, you can see recent searches that you've looked at as well on this list and simply add them to them. So as I was making this list here the other day and stuff, I was adding in some of these different companies that they're on my recent list, and you just hit the plus button, adds it to it. So you've got a plus button over here, you can add it to it, you can bin them from your list as well. Great, now it's on your list. You can move it by just dragging it around, so I'm going to do that. I'm going to add it to the group with the others. Okay, so it's in there. And then because I wanted to have these groups be visually easily identifiable as I scroll up and down, there's no real meaning to each of these colors. It's more important that they're consistent. So I just then chose a color and added it to it. You tap on the little tab beside it, and you can select a color and then add it to that. Now it's part of my group when I'm looking in this watch list. And as time goes by, you could do exactly the same. And I did that the other day when we were talking about cannabis stocks. To then run through these a bit more here, that's what we'll do. So what we'll do is we'll look through this a bit more. I'm just going to read in the chat there, and I can see people are chatting away, which is cool. This we've got people like Saucy, I'm Not a Cat, Merrick in there chatting his way as well, so that's cool. So yeah, so like, you know, this one here, right, has performed poorly while the sector has performed well. And I mean, that could be a sign that this sector begins to perform poorly, or it could be a sign that a healthy company within this sector could perform very, very well. So when you're looking at a company that's unhealthy at the minute turn into healthy, that's maybe one that you might add for your list throughout the year. Now you could do the same thing with cryptocurrencies, or with real estate, for example, or other select sectors of stocks. So one of the ones that's interesting this year, of course, is cannabis, because legislation looks to be changing in the US, which has created a bit of interest in the cannabis stocks and this volatility which has popped up recently. So stocks which had been at lows in July of $2 rise up to highs recently of $7. That was just a couple of days before Christmas, really, that we're seeing those sorts of prices coming in. And it's looking like investors are more interested in this sector overall. This is the overall ETF for this sector. They're a bit more interested in it now than they have been for some time. The last time they got kind of interest was back in 2023. There was a short-lived rally. That might have been during the time when Tilray bought over the other guys. There was some expansion there. Then there was another problem, like cannabis beverages, for example, got banned in the States, which was a big part of where a lot of, I think, Tilray and Aurora and stuff had put their diversified and tried to get legal products that they could sell, that were federally legal. Then they became illegal, and it wasn't very good overall. And then, there was noises coming out of the White House that things might get a bit better. And this is coming from the president, that let like the guy who ran the Silk Road dark web market get a pardon, stuff like that. So in terms of like his attitude towards certain products, well, if they're going to help America and help America's tax sort of revenues and so on, that's a good thing. Whether they're politically kind of necessarily everybody's cup of tea is less important to this president. So maybe we see something like that happen. I don't know. I'm not in the US. I can't comment too much on like the political aspect of these sorts of things. But this has been mentioned in stuff recently, and it's changed some of the opinions about how that industry might look going into 2026. So just to continue the story of looking through these things, we've got I already just did like big tech and stuff there with the XLK, and I added LPSN to the list because it's interesting when you're looking at Salesforce, ServiceNow, Accenture, SAP. For all that you might want to add in companies. And if you want to remove a company from a list, you can also do that in the same sort of a way, just by hovering over it and hitting the wastepaper basket. If we look over here at industrials, then that's the next one. And industrials, great word, makes you feel very, very Dow theory, very Dow Jones Industrial Average, very big American. And the big idea here is that you can't build data centers or factories without heavy equipment, right? So these companies are the muscle, the brawn of the 2026 economy. If data centers are going to grow, like, the AI bubble keeps on bubbling for another year, and the plans at the minute we're going to build 1 billion data centers is going to actually happen, then they're going to have some involvement with these industrial guys. ETN, which is the ultimate hidden gem, perhaps make electrical components that prevent data centers from catching fire. In terms of being a hidden gem, the markets have recognized this one is quite a good company, but nobody really knows who they are. And in a respect, that's one of these sort of things that makes it kind of hidden. It's been a company that throughout the years is offered a fairly good buy the dip type of opportunity. When you've seen that the markets have had a period of decline, then they've entered into a period of incline, it's gone on to make highs that have taken over their previous highs. Eventually, it's got customers. I was looking at a stock recently, and it was for a company I knew very well about 20 years ago, and I thought, yeah, this company was really, what's up with them these days? And I looked at their chart, and they were really big even 10 years ago, but then over the last few years, they've declined massively, and I thought, what's happened? What has gone on? And it turned out that they were a company that made hard disks. The actual, the inside your computer, that's the material that goes inside the spinning hard disk itself. And they're just, nobody wants them anymore. Nobody wants them. And data centers are moving towards using solid state storage. This is interesting. As opposed to moving part hard disk storage. And did this company move into doing new things and change with the times? It did not. And it's dying now. You see other companies out there that do try and transform and grow and change if they've been around for 20 years and they've had a product that is become somewhat obsolete for the market, and they adapt to where the new conditions are. Market will re-rate them, but they'll, you know, retain the customers that are valuing their service and growing with them. They'll bring in new customers when they start serving those new markets, and they'll be able to like scale with where the market itself is going. And that is why, like, you want to look at companies in a bit more detail and see where they're placed amongst things. ETN is an interesting one. Then there's a company that probably everybody knows in some way or another, GE Aerospace, which of course big play on global travel defense, you know, engines in high demand, long-term service contracts. This is a company that if you've flown in a plane before, you've probably interacted with something that they've been doing. And then you've got Canadian Pacific Kansas City Limited, right? And this is a really interesting one, especially when you look back at the charts and how this has performed since 2021. Like going like a hedgehog over here, spiky, and a kind of little bit of a curve around here, not actually going up. Hasn't gone down, hasn't dropped down. We've had lows set in like 2021 and highs set in 2024, but really, you know, it's ranging at that 2021 level. Currently priced at 73.63, which is the same price it was back in February of 2021. And this, what is this Canadian Pacific Kansas City Limited company? And I think, I mean, without living in America, like I say, I don't actually know this road intimately in the some way that some of you maybe do. These guys actually literally seemingly like kind of basically own the road between Canada and Mexico. So if there's big US trade going up and down between Mexico and Canada, these guys are making money. And it's like NAFTA has kind of sucked since 2020. And when you look at the real economy and real growth and think about the real jobs that you guys have in your real lives and how there is real economics happening along this road, but it hasn't grown since 2020. You think about the real terms recession that I've been talking about, the hidden recession since 2020, and you can see why this growth, it hasn't existed here, is a real heartbeat like monitor on the economy. Look back at GE for a split second. You can see how this has performed since 2021, rising up like the Cobra, and marvelous, having dropped down loads since 2000, and it's now actually, ever since just this year, been above the highs it set back in 2000. So that's like an incredible company. Thinking, you know, people trading this when it was $292 in 2000 and then trading it at $26 in the years 2020, were maybe thinking to themselves, this will never go back up. Yeah, oh, that type of thing. And there it is, trading at all-time highs. So you know, things can change and they can have great meaning. And I think everybody understands when you talk about aerospace since the pandemic, how that's been a story. Now here's another one, which is to do with transporting goods between Canada, Mexico, and the United States. And since 2020, it's actually been sideways, while you've been told, when you look at things like the SPX, which has only gone up, that everything's really rosy. But where are all the trucks that are making the economic activity that really ultimately translates to you being able to pay your mortgage? And that's not been so great. Anyway, the death cross on this weekly chart here, it doesn't signal well, again, in terms of that big recession story. Asking questions about what businesses do well and don't do well in recessions, good topic to have. But if America goes into a real kind of transparent, everybody's talking about it, panic-based recession, then you might see that kind of being impacted here. But if America goes into kind of silently moving out of a recession the way it's silently been in one, maybe we get signs of that coming from here. This monitoring this cross over the year will be an interesting one to follow. If we look back, by the way, there's been periods where it crossed in the past. This was 2016, but actually during that phase we saw prices increase. It crossed back again a year later, but the trend really pushed up, and a nuanced understanding of the economy during that phase, during Trump's first term, in fact, if you remember, that would have really benefited people who were looking at trade in that period, right? Then you look back and you think, okay, when was the last cross? The last death cross before then was in 2009. Well, you know, you can look at the history books now to understand that if you don't, but the period following 2009 was one of stress for businesses. It was only really going into 2010 that people really felt the economy start to get a bit better, whereas the kind of the financial industry crash happened and the the kind of the whole stock market crash happened, and economic activity was picking up slowly but surely. But you can see here, if you look at this chart to understand, like in sort of 2011 there was a drop down to 2012, and it took until 2012 to push back up to the highs it set in 2007 before the financial crash. But then into 2012, 2013, 14 pushed past, and we kind of looked back and understood that we'd really truly moved past the great financial crash. So whenever the drop came in 2016 in Trump's first term, and we moved back out of that again, you understood that we weren't going back to the financial crash highs, that there was genuine economic activity, and that pushed up the way. What we've seen for the last 4 years? Well, this incredibly unusual on this chart sideways movement. If you look there, you can see historically it's never happened before. So this is something that's super interesting to understand if you understand this has never happened before. But if you'd understood it was happening back in 2021, what good would that have done you? You had 4 years to live through it. But having lived through it for 4 years, having understood it never happened before, asking questions as people think, will the economy go into recession for reals or actually expand out of here? This is the time to be asking that question, having it on your list. That's why it's in the industrial section. Moving on, real estate, and for some of these I put in ETFs that are, not called select sectors. We do have select sector for real estate. For the cannabis one, it's just a straight up ETF. Or you can choose whatever ones you like for doing this job yourself, but this is, like I say, it gets you started, good framework. Real estate, big ideas. So like, it's not about malls or so much hotels, although hotels is a thing. It's more about like warehouses, server rooms, that sort of thing, talking about the economy, AI story and servers and so on, but talking about as well that logistics coming back into play again. Is there going to be actual consumption, real economic activity? Equinix, they own the buildings where the internet lives, and PLD, Prologis, they own the warehouses that power Amazon and global shipping. So EQIX, here's a story here, and you can see again, looking back over the last 4 years, it tells its own one. Looking at PLD, again, looking back over the last 4 years, it tells its own story. Real interest, real insight into the economics of the real estate thing. If the AI bubble does continue, a different part of the sector of the economy would see growth, which it hasn't seen for 4 years, changing different aspects, impacting things like the Russell 2000, and having more impact on the people who indeed employ people. Let's mention for 1 second here, NVIDIA have 250 employees. Right, 250 employees. So whenever the Fed is looking for the economy to kind of contract a little in order for it to be able to cut interest rates, and it's talking about how there were 4.7% of Americans were unemployed, which accounts to 15 million people, that the 250 employees that NVIDIA has, which is the most biggest company with the highest stock price, the highest market cap in the world, those 250 employees, they're not looking to see the unemployment figure go up by any of them being sacked. But then how has it gone well for about these guys that have the warehousing and actually work and own and stuff on the actual value chain, delivering with Amazon or housing Amazon's products? I mean, like 4 years of sideways movement for them doesn't say the same story about the economy, the thousands and thousands of people working in this company, as what the 250 people working for NVIDIA says about the economy. And that's why this is such an interesting story. And this chart, these charts helps you see it, helps you monitor it and track it, understand what's happening in the economy, and breaks it down into individual sectors that you know where you can go long or short and so on. Here's cannabis. The way that this works is the same sort of deal. I don't need to go into detail on this. Like I said, we covered this in the Discord, but there's a ETF, and I've already mentioned how the news has kind of impacted this one with legislation changes coming up, various companies in amongst it. As you can see, some of them very similar looking to the ETF, some of them less so. And then healthcare, and I thought this is like to give people a reminder that there's lots of pragmatic uses. Look at this one at highs. It's a double top. Maybe is it going to crash down, or is this sector, which has only ever been going up, finally back at the highs of October 2024, looking to try and push higher again, having over every couple of years moved up and up and up and up and up, offering that real 10% value that the kind of the US equity market index likes to kind of get every year. A lot of that comes from big companies that are involved in the healthcare sector. So if we look over at a company like Johnson & Johnson, and it's pushing past its all-time highs with there's like an outrageously positive upward bull trend. This year has been super positive for Johnson & Johnson. Are they going to be able to propel this one to take past its prior high? So again, looking at dynamics and thinking, wow, this big company here might help this select sector rise up. If it does, it'll pull others with it. And you look at other companies like Lilly, right, which is really well known for like the Ozempic type injections and so on. Whether their particular one is Ozempic or the other one, I don't know, but you know, the weight loss injections, big stuff, massive money, raking it in this year, tons and tons of money. Are they going to be the ones that pull past the select sector up past into all-time highs? And if they did so, would that see the one of America's greatest ever success story companies actually revert what looks like a huge correction that takes it back to lows it hadn't had since 2020? Again, this 4-year story. So the current price of United Health Group, which is UNH, are sat at the prices they were at in February of 2020. Currently, we're about to go into 2026. That's 6 years. I mean, I've been summarizing at times. I've been talking about 2021 or 2022 as we look to 2026, talking about the last 4 years. On this one, looking back over the last 6 years, right? 6 years, it's not gone up. And this is the American success story that goes from $15 in 2009 up to highs of $600 in 2022 or so, and hasn't managed to go past that and has dropped down since. So if the healthcare select sectors at a double top near all-time highs, and Johnson & Johnson is pushing past those prior highs really strongly, and the likes of Lilly are doing well, and United Healthcare has had a tough year when you think about how tariffs on pharmaceuticals have impacted this company more than others. Will you see this potentially get a retrace and go on to achieve those highs? This could be the dip that some portfolio managers wait for literally their whole lives and they don't come along, right? The dip where it drops down and they get given months to be able to like make the decision about putting money in. There's the ones that have nightmares about not investing in March because their liquidity was tied up elsewhere as it rose up again of March 2020. And there's ones who have nightmares about not investing at all whenever it dropped down to $16 from highs of 64 back in 2009 as one of the most safest blue chip plays the American modern investor has ever known. In a world where everybody knows that America healthcare is expensive and only gets more expensive, and you know, for all the good and kindness that exists in the world, there's one thing you'll never get for free. You might get a smile, and you might, but you'll not get anyone to save your life for free in America. Yeah, that costs money. That's unfair. They will save your life. They just will. You know, you just might not be able to afford to fix a broken arm or something. And so this type of thing is expensive, and it just keeps on getting expensive. That's if the select sector rises to new highs. What's happening here? Has it managed to price in the impact of the basically the rise it had up due to COVID, which wasn't that much, you know? Has it priced that back in? Are we in 2020 prices because the business should really be just higher than it was in 2019? Are we going to continue on from there? Has this last 6 years have meant nothing? Has it priced in the tariff volatility? Is this a recovery? These are great questions, but in a massive recession, perhaps this one drops down. Looking back to 2005, 6 when the highs were put in, and then over to 2008, this crashed down during the crash, you know, the actual one that hurt here. Afterwards, could this do that, or has it done it already? I would suggest that there's a good argument to be made that this could potentially have done what it had already done back then already, just in comparison. This could be one of those massive buy the dip opportunities, but it goes hand in hand with the economy doing well. Anyway, seeing companies within that sector and that contrast is something incredibly interesting, well worth looking into. And another good example of something that's been exposed to tariff problems is CVS. We talked about buying back into this here back earlier in the year, actually. So that's been a great call. Could have gotten at 44, currently trading at 79, but that still puts it within the range of its own last decade. Going back to highs it had in 2015 and highs it had in 2022, it is miles off them. They're both above $100. If this thing were to double in price
price, it would break those highs. But if it only goes up by another half, it just barely approaches them, and it just approaches those highs. So, like, you know, this has got a lot of meat left on the bone if things start looking good in the economy. The recent tariff struggles pushed this down to lows in 2025. Since then, it's gone back up mid-range. If it goes towards those highs, great. You know, I don't trade healthcare stuff often, personally. Not as much as I would get in and out of many other stocks and many other equities, or indeed with the sheer consistency and frequency of which I trade cryptocurrency. But those are really interesting stocks within that sector. Somebody else out there might have a million to add to it, and that's what I want to see coming from the community. In this show here, I like to talk about cryptocurrency, talking about the past, talking about the future in markets, and this is a really interesting period right now. The big question, and since it's been so primed with the talk we've had so far in the show, is about whether or not this death cross here on the daily Bitcoin chart is going to lead to a full year's downward trend, as it has done at times in the past, or will it recover? If we look back to the last year-long downtrend from 69k down to 20k, this happened with a cross, which came in at around about January, and then it was of 2022, and it wasn't until February of 2023, so let's just call it a year until it crossed back again. So the question now for crypto is, does this happen for a year? But with this overall upward trend that we see, structurally, these lows have not been broken. From the last higher low during the downward trends, if we look over here to when the last cross happened on Bitcoin, the higher low, which was to be broken, did still exist. And it was whenever it came back up to retest this area and failed that the major drops happened on the chart. Has it come back up and tested off of highs? That's not the story right now. Has it come down and tested towards prior lows? Yes, it has. So what are you looking for? A question being, could it retest the 200 simple before it needed to drop down? If the model from 2022, if you want to call it, was anything to go by, if then you might say so. So the real kind of pivot point for bullish and bearish going into the year, perhaps if you're not invested in crypto but want to understand liquidity, because this has now become considered a proxy for liquidity. Indeed, if you want to just understand risk on, risk off, this has always been the proxy for that too, then this is a really good place to look and keep on your charts. But if you're actually trading this thing as well, you might be interested in these dynamics that exist. This could push back up, and it could come with a sort of January type of rally. Why would I mention that? Let's look back to 2023, and I'll remind you briefly why, as we saw prices doing this volatility and steep moves to the downside, followed by a very shallow price action when you think about it, trapped within a tight range as the 50 simple came approaching. The target, perhaps if things go bullishly into 2026 for some things, of around 106,000 as being the top end of where you can really be bullish at the moment, unless you're thinking macro. But if you're actually looking here and saying the price is breaking down below 75, then obviously you're going to have to be bearish, because the story I've explained so far would be you'd have a golden cross and breaking structure, and that would be a year perhaps of negativity. You'd be looking for the markets to prove you wrong, but you'd have to be proven wrong. That would be your assertion at that point. So the so really then, what's the story from 2023 which could be looked at to inform us of the day? And following steep descents in price from and volatility, a period of shallower price action occurred near the 50 simple period moving average, and it came into this Christmas period of slightly lower volatility, lower liquidity, and it seemed like in this phase we'd had bearishness for quite some time, and things seemed like they were at their darkest hour, but yet to get darker. How low could it go? Well, people were saying it could go as low as 3,000 at that point, and it became fairly bearish. Now, we did call moves towards the top side and so on, and yeah, great, brilliant. Like I say, I want to see my subscriber number grow this year. But anyway, this period saw a massive burst up in price in the first few weeks of January, I saw prices move towards the 200 simple. It did then break above it, but it came back down to retest the 200 simple. And I'm keeping this super, super easy and accessible. If we do see a move up, do I think it could go up? Yes. It could, if it bursts past the 50 simple after a period of sideways movement here, it could burst up to the 200 simple moving average, could go higher and so on, might retest it and confirm afterwards a longer bullish upward trend, which may be associated with large pullbacks. And as we've seen along the way, those pullbacks have been quite high percentages, sometimes associated with periods of long sideways bearish, lower lows, lower highs, bear trends within the overall macro trend, lower lows, lower highs, bear trend within the overall macro trend, and lower lows, lower highs, bear trend within the overall macro trend. But when we've arrived at these lows overall, it has found a time to retrace. If it breaks below 75, of course, this simple continuation structure of a triangle would give you probably more than the elasticity of the triangle itself. You'd be looking for the flagpole to be expressed, and that would take you down to some structure probably around about the 60s as the next leg down of that journey. With the 200 simple and the 50 simple being as far apart as they have been for the last 3 years, there is an argument to be made about kind of enough is enough in the meantime, that some liquidity will have been returned, open interest changing hands and so on, as you would get during a flush in markets. But that's it was far too optimistic thinking until such times as you've been proven that that's the case. Until that happens, you don't have it having happened quite yet. But this is a consolidation pattern, and after these happen, you know, you see price tightening and coiling up inside a section right next to this 50 simple. If it did want to jump up the way a target towards 107 would be very easy to achieve. Now this changes the story an awful lot, because these things are not all aligned the way they were before. What we have here is a period of downward movement into consolidation sideways, while what you've had over on the big boys toys chart like NASDAQ is periods of upwards into all-time highs. If we go to SPX, having been set just the other day. Bitcoin was following equities very strongly as being a risk on, risk off canary. If there is going to be positivity in 2026 and somehow be like 2017 was for Trump, if you remember the first term trend, then maybe we see 2026 actually be a positive one. To be positive into the year, given so much volatility in the past year, you have to be able to cleanse your mind and take a sort of palate cleanser on what's been going on. And the way to do that is to take a step back and use something like I've outlaid here. So which is why this is going into my YouTube video description and into the Discord to be shared with all of you. Let me just see. We've got 20 people watching live just now. Chat rate 2. So it's been wonderful having you all here. The best way to actually get that link for that watch list, and you do want this watch list, because is to go into the Discord. So that's where I'll share. I'll not put it in the link to the description straight away. Worth checking if you're watching this video in a week or month or a year though, because I'll probably do update it there just so that it's easy to find. And then right now, if you want to be involved in this community and so on, and that, go and get it from the Discord where I'll share it. And the reason for that is because you will be able to discuss it with people there and add to it, and this thing will evolve over time. So that's why I'll do that. It's good to see people chatting in the chat box, but of course on a show when you look at 20 viewers, you really do rely on people wanting to stand out in the chat. So I completely understand that people didn't want to stand out and be that one, you know, that's chatting lots about things, so that's fine. I had some people doing some good chat in there though. People talk about DJT, about Kloss. I had people talk about other stocks. I had some tickers being shared by Grace Foundation earlier on as well. We had great chat all the way through, and supportive stuff from Lisa, Vis-a-Vis, and Jamie as well. And there's easy to find lots of info, even more on the Discord too. Today's show really has been a wealth of information. It's a wealth of value, wealth of value. The crypto play at the minute is really interesting. The state of the economy is really interesting, and the fact is that people are going to get caught offside for 2026. I can see it coming. See it coming. Whether the trend is up or down, I can see it coming. You know, and people are going to trade 2026 like it was 2025, and they traded 2025 like it was 2024 or 2023. It was just wrong, and then it was wrong again, and it'll be wrong again next time. And that's been my view going into this year, as it was last year. And instead of like being able to adapt and so on, a lot of people have found it hard to adapt in the year, you know, even though it's been a real core of the show. So this year I'm making it extremely explicit that next year should be a different year, and I'm giving you the tools to be able to handle that. Hopefully that's registered with people and they can see that. Oh, check it out. Look at there's gifts being shared right now in the chat box there as well by Lisa. Memberships for folks. Crazy Cat, Disco Biscuit. So you guys have been members in the past as well. Don't have a beer glass next to you. Not get your beer glass again though, no? Oh well. Hard lines, get a beer glass in the next show. Tune in for that. It's been great. And anyone watching now, I should say the link for the Discord. Here's a couple of bits of information actually you need. The Discord link is discord.gg/Rocky Outcrop. That's right, it's just a link. You type it into your browser on your phone or whatever, and it'll open up the app and everything for you. And the way it works is through invites and stuff like that, but that's an open invitation. That's what you want. You also want to go to www.technicalanalysis.school if you want to learn how to do technical analysis. I have a course and I've got a discount right now called Save 500. That's the discount code. Stick that in and you'll save 500 bucks on the course. So that's worth doing. And that's it. Yeah, I hope you've enjoyed the show. Join the Discord and I'll see you all again next time. Thanks so much for being part of the show. Yeah, never miss a Wednesday. Here's the top fans today. So if you want to be on this list, make sure you tune in next week. Good to see you in the chat box. A couple of names that don't always feature in the top list there, but there's other people who've been around as well for a while, being supportive and helpful. Homer's Ghosts, good to see you in the chat, for example. And Slipboy Rick, who's been joining us more lately than previously. Lakeside Trader, all these people. If you're new here, subscribe. I want to see my subscriber number go up this year. That's my target. I'm going to keep on banging on about it until I see some upward movement. All the best. Here's Jimmy. Here's Dashy C. Oh, what am I saying? No, if you're still here with us, I mean, let's just see, is anybody tuned out? The elite, the elite 24 are with us. There's, I totally completely forgot. Regardless of the fact that we got nowhere near a goal, nowhere near it, I thought I would crack open my Christmas beer. Just need to hydrate first. And give everybody a bit of Christmas or New Year's cheer, a bit of holiday New Year cheer, because there's a video and a song you might have forgotten about. And if you're new to the channel or only joined us in the last year or two, you might not know it at all. But making this video literally almost killed me. I did almost die within 6 months of making this video. I'm not joking. I actually really literally almost died making this video. Whatever. It was cold. But it's worth playing for everybody. It's worth playing. Let's play it. Let's have some fun. It is, of course. Theater mode. Yeah. It is, of course, the greatest song anybody has ever known. Ever.
Should old acquaintance be forgot and never brought to mind? Should old acquaintance be forgot and the days of old lang syne? For our bing bong, my dear, for transporting and rocking. For we are apes with diamond hands, no bigger hands are we. We'll buy the dip and enjoy the trip, and the moon is where we'll be. For our bing bong, my dear, for our bing bong. We'll tack a couple kind of shit for the love of our bing bong. For lots of fun for you and me, and tons more than these. Join with us for another year, YouTube's best community.
Okay, that was a lot of good fun, that one. A lot of good fun. Of course, I sang so well in that I had to be used as the bass line. And Jamie's more eccentric singing allowed him to take front stage because, of course, I had to be the one that kept the consistency, you know? The harmonic core, so that Jimmy could freestyle his tones and pitches. And together, that's what teamwork is. And so we did it. We did it together. And everybody should continue to sing that song forever. It's our new sing song. And we should also add new lines to it. Any other trading things. We're also DJs. We're DJs as well. We're paper. We're not paper. We're diamond hands. We're DJs. We're apes. We're what are the other meme words for things? We need to come up with 2020 was what do we need, a pandemic back so we can come up with memes? I don't know. Anyway, folks, I've had fun. Let's bring in 2026 with the same sort of aplomb and try and get me a couple more subscribers. How about that? Hit the subscribe button. Catch you all next time.